If you have a very small account, the dollar volume of 20 million is, yeah, it's okay. Absolutely. No problem. There's two things you should never do. Go full rocket scientist, or go, unless you actually have the brain power for it. Most people don't. Very few people actually have the brain power for it. Probably less than 1% of the population. The problem is 50% of the population thinks they have the brain power for it. And also never go full retard. Getting the useless shit out of your trading, it's the hardest thing ever. You're gonna go through a lot of trial and error in the first years. That's where people fail. They can't figure out what works and what doesn't. That's why you should, you know, as a new trader, you probably shouldn't even use indicators. Like, I wish I started without using any indicators. Just focus on price. That's the most important thing. And all the indicators are deprived of price anyways. So, you know, just go with the basics. Only price pays. And then, you know, after a while, you can start add some indicators if you really feel like you found an indicator that helps you give you an edge. For me, it's the moving averages. It really, like, they really help me a lot. And when shorting, I also look at the VWAP on the intraday. But really very few. I don't, you know, like when I do parabolic shorting. Yeah, fundamental analysis, especially if you're like a short-term trader, is almost useless. Almost completely useless. What you really need to be able to read is the order flow. Like where is the money going? Which way is the money flowing? And what stocks are in play? Like earnings and stuff like that. If you're very short term, you really don't need that. All that matters is momentum. Momentum. The longer term your trading is gonna be, the more you need to involve fundamentals. That's why looking at, even if current earnings are not there yet, like, you know, it's one thing you have these, you know, growth stocks, but if you look at like the earnings and the estimates for these copper names and steel names, like the numbers are incredible. These things are growth stocks right now. These things have triple-digit earnings and high double-digit revenue growth. Look at US Steel. And they have huge estimates for the next few years. So even in like commodities and cyclical names, you know, to find the next big trend, look at the estimates. Oh, wow. This is a great setup. What? Obviously buying here, you know, that's a Moran certificate. But, you know, this is something that most of you should have found on your scans. This is like text. Okay, the dollar volume is less than 10 million, which is, it's kind of a liquid, but I think a lot of people had this thing in your scans yesterday. Holy shit, it's a great setup. It's a micro cap, actually a nano cap stock, huge momentum. I mean, this is textbook. The entry was in the mid-high 8s, okay? That's where the technical entry was. That's where you had edge. You bought, let's say, 854. Now you're gonna go places, okay? You're gonna be worth tens of millions in a few years. If you're not already, I don't know. No, probably not, since you're trading this very liquid stock. Like buying at 854, like this was a 5-star. They don't get better than this, okay? 5-star. Like literally picture perfect. You won't get better setups than this on a nano cap. Like these nano caps, like, you know, larger stocks, they kind of tend to find support on the 20, but nano caps, they find support on the rising 10. This, like, look at this thing. It tripled More than tripled in a few days, pulled back, undercut the 10, reclaimed, oscillated a little bit, got tighter. I'm gonna show you something. I'm gonna show you the exact same setup in something else that we had recently in something else. Doge. Exact same setup. Actually, it wasn't exactly the same. Never mind. It wasn't exactly the same. It kind of undercut the 20 and found support on the 20. But, you know, if you look at just the patterns, it's exact same. Exact same. You know, the same things repeating over and over again. You want to find these explosive stocks. And guys, those of you who have these tiny accounts, less than a few million, you have such an edge, man. You have such an edge over someone like me. You're gonna really have explosive returns. These are the same. These are the types of setups you're looking at. You feel for the bag holders like you in Tilray? I don't. You know the pain is, you know, you can just end it with one click. Just click sell and it's over. And then you're gonna refocus. Just click sell. It's that easy. I don't feel one bit for you. I hope this is the start of a growth journey for you. It's all about what you do with this. You can keep it and feel sorry for yourself, or you can get your shit together, take your loss, and actually start developing some rules. It's up to you. There's no sympathy in this game. If you don't have rules, you're just gonna be a victim. And you decide, do you want to be a victim or do you want to be in control? Is there a book on trading psychology that big impact on your trading? Nope. All the trading psychology books I've read, which is like 1 or 2, they were shit. I don't believe in trading psychology. Or at least I don't trade in. I do believe in psychology, but I don't believe in trading psychology books. I don't think they're gonna fix your problems. It's just another layer of complexity to extract money from losing traders. Exactly. Setups over psychology. Trust me, guys, if you have a setup that works, and you know which market conditions it works, you won't need a psychology book. You don't need to go to a shrink. Trading psychology is not your problem. Yeah, Deep Work by Cal Newport is pretty good. Do you know why guys like me are rich? I actually thought about it. Because people overestimate their abilities. I just looked at something like GME, where, you know, on 2 trades, like a quarter, yeah, about a quarter of all the money I made in trading over 10 years came in a 1 month span on 2 trades on GME. Because millions of people came together and decided they're gonna be overconfident in a group. So I figure maybe I should be underconfident as much as possible. Because that seems where the money is.